today with William Davey from Milecross Financial to talk about how you go about getting a mortgage if you're a first time buyer, if you already own your own home, or if you're an investor.
Hi Ciara, how's things?
Good. So William, if you could maybe tell us a little bit about yourself, just for...
Yeah, my name's William Davey. As you say, it's Milecross Financial. Obviously experienced in mortgages, been a regulated financial advisor now going on 20 years. And we're going to talk about obviously all the different types of mortgages and answer any questions that we'll have.
Great. So we'll start off with first time buyers. This is always a hot topic. What's the minimum deposit you would need as a first time buyer to have to put down?
Okay. At the minute, it's really good for first time buyers. The minimum deposit is 5%, subject to the lender and the criteria for the individual, but you can get a 5% deposit mortgage at the minute.
That's great. And is there an end date to that, or is that?
No, what that would probably come down to is really how the economy goes. So it is. So 5% deposits are a wee bit riskier for a lender. So they are. So it just depends on the prevailing conditions in the economy.
Okay. The next question would be then, if I was wanting to go for a first time buyer mortgage and I was buying it on my own with my own salary, how much would I be allowed to borrow?
Okay. That really just depends on the lender we're dealing with. So lenders will vary between 3.5 and 5 times gross earnings, and that will depend, as I said, on the lender, but also potentially on the loan to value. So it's just assessing everybody's needs against that criteria, but that's broadly speaking where you would be.
Okay, so then does that mean if I was to buy it with my brother and both our salaries, would it be 3.5?
So yeah, it would be 3.5 times joint gross salaries.
Okay.
So it was if there's two parties. And it would obviously, you have to take into consideration personal debt, but that's the general rule of thumb.
Okay. What are the interest rates like at the minute?
Okay. Interest rates are still really, really good. For first time buyers, if you're looking at a 5% deposit, you're probably talking somewhere between 2.5% and 3%, just depending on the lender. If you've got a decent deposit, then you are talking closer. You could get under 2% still at the minute, even though rates have risen a wee bit. The rates are still really, really good.
That is good. And then if you were to get a mortgage for 150,000 with a 5% deposit on a, say, 25-year repayment, what can you expect your repayments to be monthly?
Put me on the spot now, Ciara. You'd probably be talking somewhere in the region of about £680 to £700 per month, just depending on the lender, the rates, etc. 680 to £700 per month.
Okay. And that's with 5% down.
Yeah.
What fees, if I was getting a mortgage, what fees should I expect to have to pay out on top of everything else?
Okay. Are you talking about lenders' fees?
Lenders, survey.
Okay.
Like that. Anything that the bank or yourself might charge.
Okay, so it really just depends, and that's where my job comes in, is actually to assess the best deal on the market. So some lenders will charge a fee, some won't. Some will charge a survey fee, some won't. Some will charge a solicitor, pay for the solicitors, and some won't. So it's assessing the whole deal. So sometimes it's actually slightly better paying a slightly higher rate, which might not have a lender fee, might not have a survey fee, and might give you free legals. So every deal's different, and it's just assessing the right deal for you. Just depending on the size of the mortgage, I may charge a fee as well. So then other fees associated the only really other fee would be potentially stamp duty. So it would.
Okay. And sometimes, like I know Danska had done an offer there where they covered the price of maybe the survey or something like that. Is there anything like that going at the moment?
Yeah, a number of lenders are doing free surveys and free legals. So, but it's really good. Yeah, but it's just it's assessing the best deal overall when you take all those factors into consideration and the rate as well. Because there's no point going for the best rate on the market, because ultimately that's probably never the right thing to go for whenever you bring all of those fees that you've mentioned into consideration.
Okay. That's it for that one.
Great.